Hey, Top Gun Options traders and investors, Matt Buckley, call sign Wiz, primary and weekly options model portfolio manager here at TGO. And apparently the market just woke up to what we've known for about 3 years here at Top Gun Options and have been successfully trading. What's that? That the Eurozone is a political and economic train wreck. Okay, so, fears today out of Italy that they can't stitch together a coalition government. That's news to the market. Folks, since post-war Italy has been around, there's been about 50 coalition governments, sometimes 3 to 5 in a year. We have Berlusconi, the Italian playboy, well, he's out of the picture, but now we have an Italian comedian trying to form a coalition government. I mean, you can't make this stuff up, folks. So the fact that it's, quote, news to our market is not the reason that we're down right now. It is, but it's disingenuous, and we'll talk about what's going on here for real. Operationally, here in the United States, we had pending home sales come in essentially flat. Looking for about a 0.3, and last month's were actually revised down. Big downward revision from 4.5% to 3.8%. So that goes with some of the not so good housing news that we got yesterday. That, folks, this is why, in my opinion, the market's selling off right now. Case-Shiller was pretty strong, but new home sales imploded, and again, the previous were revised down. So really seeing a mixed bag out of housing, and again, that's why the market's off, in my opinion. It's because all the 500-pound heads are saying that housing's going to pull us out of this train wreck. Why? Because Dow theory, the Dow transports and financials, transportation and financials tend to lead us into and out of recessions or train wrecks, right? It makes sense. Lending and people shipping stuff usually is a canary in the coal mine for the economy. So since those really aren't playing the way they used to play in our old, in our father and mother stock market, now we're looking in this new type of market, what's going to pull us out of this thing? And all the 500-pound heads are saying housing. I don't agree with that. And as you can see, now that the numbers are starting to come in and be conflicting, they're starting to worry about whether or not we're going to pull out of this thing. Tomorrow, folks, going to be a big day in the market. Friday, the market's closed, so very volatile day tomorrow in the market with weekly unemployment claims, GDP, Chicago, PMI. So let's take a look at the market action this morning. This is what cracks me up. Big gap down move at the open, right? If we were in old market, whereas the Fed it wasn't propping this market up, the Dow would have been down 300 points, the VIX would be up in the 20s, and gold would have caught a $4 bid today. But look at this. The VIX was as high as 7% earlier, and now it's only up about 3%. And look at what the market's doing. It's clawing back. Why? Folks, you can't fight the Fed, and you cannot fight central banks who are going to, quote, in Mario Draghi, the president of the ECB's words, "I'll do whatever it takes to support the Eurozone," or Bernanke, "I'll do whatever it takes to keep this economy afloat." So just like this Monday, a couple Mondays ago, was the gap down on the Cyprus train wreck, look at what the market's done since then. We've recognized that the sun rises and that central banks are going to pump the economies higher. So that's what we're seeing in the market. Market sold off, I think at its highest or lowest point, we were off maybe close to triple digits, but we've gained most of that back, and we're in a general climb out here. So I think whenever we see this type of, nearly 100-point sell-off, we're going to give about half of it back, get half of it back, which we are right now. Techs are still taking it on the chin, though. Apple and Google really hit hard today. They're starting to claw back a little bit as well. So we have some weekly positions that are monitoring in our weekly options model portfolio closely right now. But like I tell my traders in the weekly options model portfolio, what a difference a day can make. So we have the rest of the day to go, and then we have tomorrow to go as well before options expire tomorrow afternoon, or the last day to trade them is going to be tomorrow afternoon, because Friday, obviously, the market's closed. So interesting day in the market. It just kind of cracks me up that all the talking heads, Italy this, Cyprus that, really? Who cares? If anything, it's only going to get worse over there, but nothing bad is going to happen. The sun's going to rise. If Cyprus wasn't forced out of the Eurozone, nobody's going to be. Okay, but yeah, the systemic risk of potential bank account seizures in Greece or Spain or all sorts of stuff, it's out there. But again, Mario Draghi is standing by in his Peugeot or Fiat or whatever the hell with a printing press to keep all of that afloat, to keep that Ponzi scheme airborne, just like the Bernanke is doing here in the United States. Okay, so nothing to see here. Move along, and we're going to get airborne again, and this rally goes higher. I think the only thing that's going to pull this market back is bad earnings. We've proved in the past couple weeks, we've seen chemical weapons in Syria. We've seen China and Russia getting together. The new premier of China over in Russia essentially laughing at the United States, and the OECD report saying that China is going to overtake the U.S. as the #1 world economy by 2016. I mean, we've seen Cyprus. In the past 2 weeks, we've seen absolute nightmares where if it was old stock market, pre-financial tsunami in 2008, we'd be down at 0. We're not, because the Feds here have no fear. Okay, I got to get back to trading because this is just fun. This is I'm having a blast doing this because you can set your watch to how this market's going to react to the clown car and the music. So happy hunting. Make sure you hedge. I'll be back with tomorrow's sit rep. We'll see you.